Welcome back. Now, Cashbuild is struggling to build from the ground up following the collapse of the renovating boom after the pandemic. That's as the building materials retailer reported an 81% slump in operating profit for the interim period, which resulted in a 20% drop in headline earnings per share. This comes as consumers continue to face tough economic conditions and discretionary spending remained under pressure from rising interest rates. And joining me now to help contextualize these numbers is Cashbuild CEO Werner De Jager. Thank you so much for your time, Werner. Now, you had revenue growth of 2%. I know that it's tepid, but as long as there's still growth, it means that things are still moving. What would you attribute that to, demand or selling prices?
We've been very aggressive with selling prices to make sure that we don't lose market share. So that has unfortunately impacted on our gross margin slightly. You see the percentage is a few basis points down on the prior year. But I don't think there's lots of demand out there, so it's really a tough fight, and making sure that you get the business that is out there.
Yeah, and actually, what kind of building needs are your customers seeing even during these tough times, or what kind of customer is Cashbuild attracting right now?
Yeah, we've seen that customers are spending less in terms of smaller projects. So the decorative type items, your paint, your floor tiles, your decorative ceilings and cornices, those items are still doing fairly well in our business. The structural items, the cement, the bricks, those things are struggling. And that is an indication that people are not necessarily starting any big projects at the moment. And our customers are typically the bucky builders. They make up 60% of our revenue roughly. And then the rest is real people, DIY people, build it yourself people out in the country that's got a need to build something.
Yeah, it is quite interesting seeing those dynamics there. I did notice that there was an impairment that you recognized for P&L hardware. Just shed some light on that and its impact on your bottom line.
Yeah, so the value of the impairment that we had to do on the trademark and the goodwill was 136 million. So it did have a big impact on that operating profit number you mentioned earlier, obviously excluded from HEPS, while it's looking better. But we've in the last financial year, in the second half, we also took an impairment of that goodwill. And unfortunately, our plans have not had seen a big turnaround in the business yet. Hence, we had to unfortunately impair the rest of that goodwill and trademark this 6 months. So that's where that comes from.
Yeah. Werner, obviously revenue is a struggle, but are there any significant cost factors that are adding to the headwinds?
So we, as a business, we face with a lot of fixed costs. I mean, rentals, people are our biggest cost in the business, and we gave staff 8% increase this year, in line with what's happening in the market, and leases also increase. But with our natural attrition that happens in the business, we managed to reduce our headcount by 500 people, which will help us in the second half of the financial year. But yes, those cost pressures stay there, and we just need to make sure that we manage the top line.
Yeah, and actually talking about, stuff that is coming and, some of the relief that you might see on the bottom line, there is the narrative that we are going to see interest rate cuts in the second half of 2024. Do you expect any significant impact to come through, and maybe when that could come through?
So traditionally, Cashbuild customers were not that indebted, and that's unfortunately changed in the recent past. So we do believe that there will be an impact. I don't know whether it will be significant, but that normally follows fairly shortly after the rate cuts. One of the uncertainties for us in the second half is the election in May. It's always a time of uncertainty and difficult trading for us leading up to an election normally.
Yeah, all right. Just looking at your inventory, what kind of inventory levels are you seeing right now?
Very much in line with our expectations. It's been on 90 days at year end, and at half year and prior year it was at 89, and this half year it's at 90 days. So it's very much in line with our model. It is slightly up when you look in pure rand terms, but that's an indication of the trading that we've seen in the second quarter, that we're 5% up, where our stocking system does take into cognizance if you're slightly up, it will order in a bit more, but it won't affect the days that you have in stock. So it's not a concern for us.
All right. Well, talk to me about the conversations that management is having in terms of prudent capital allocation amid these challenges. I mean, you're also expanding, still paying dividends, and also buying back shares.
Yes, it's interesting discussions. Our focus is on getting more stores rolled out. We developed a smaller model Cashbuild store that can go into pre-existing buildings, and now we've got to set ourselves a goal to have 10 of them approved by end of June, which is our financial year end, so that we can see an increase in the number of store rollouts. Dividend, we're sticking to our policy of 1.5 times cover. That's excluding the impairment that was put through, and we will keep on focusing on that. Share buybacks, we did receive permission to do some general share buybacks from our AGM that was held late last year. So we will be in small quantities be buying back shares at these type of levels.
All right. Well, thank you so much for your time and just giving us more detail on those numbers. That was Cashbuild CEO Werner De Jager.